What do you do when you aim to democratize the financial markets? How do you disrupt traditional brokerage firms? What does it take to simplify investing? That's maybe something brothers Nikhil Kamath and Nithin Kamath are thinking of when they started Zerodha. Zerodha is an Indian financial services company offering brokerage-free equity investments and more. But how did it get to where it is today, which is one of India's biggest stockbrokers with about 6.5 million active clients? Imagine two brothers, one of whom didn't go to college. So in a way, it's kind of like Steve Jobs and Mark Zuckerberg. The next time someone is thinking of dropping out of college, there's an Indian example to cite. They wanted to address the challenges and issues they observed in the Indian stock brokerage industry. And both of them had some experience with stock trading. Nithin Kamath had started stock trading at a young age, and Nikhil followed in his brother's footsteps. Nithin Kamath started stock trading at the age of 17 and later worked in a call center and as a sub-broker. But Nithin Kamath was said to have lost 5 lakh rupees when he was younger. He started working at a call center while trading in stocks during the day. In 2005, it's said that a rich American was impressed with his trading portfolio and gave him a 25 lakh rupee check to manage his money. Then he began handling more accounts. Yet he didn't seem to find a platform where he could seamlessly switch between different accounts. Nikhil Kamath was said to have dropped out of school to play chess and later dropped out of chess to trade stocks. They were said to have experiences that exposed them to the complexities and challenges faced by traders. They were said to have recognized that many brokerage firms in India lack transparency in terms of fees and charges, and that could make it difficult for traders to understand the true costs of their transactions. Traditional brokerage firms in India were said to be typically charging high percentage based commissions on trades. These high brokerage charges may have discouraged many potential investors from participating in the stock market, particularly young and price sensitive people. The stock trading processes offered by existing brokers were said to be complex and intimidating for new investors. This complexity may have acted as a barrier for people who wanted to enter the stock market, and many brokerage firms may not have offered sufficient educational resources to help traders and investors understand the markets and make informed decisions. So, the Kamath brothers may have identified a gap in the market where a new and tech-driven brokerage model could simplify the trading process, offer transparency, reduce costs, and provide educational resources to empower investors. And in 2010, Zerodha was born. The goal was set to be offering a transparent, user-friendly, and cost-effective platform for traders and investors. How could this reshape the landscape of stock trading in India? The name Zerodha itself is a portmanteau. It combines zero and rodha, the Sanskrit word for barriers. So together it means no barriers. Zerodha was said to have introduced a flat fee structure. Instead of charging a percentage of the trade value, Zerodha was said to have opted for a fixed brokerage fee per trade, regardless of the trade size. This transparent pricing model may have made it slightly more affordable for both novice and seasoned investors. There was said to be a clear breakdown of fees and charges through a brokerage calculator on their website. This transparency may have helped traders understand the true cost of their transactions and build trust with customers. And Zerodha's sign-up fee of about 200 rupees for onboarding also contributes to its overall revenue. The brothers were said to have distributed early versions of Zerodha to trading communities, attracting early adopters and advocates. There was also said to be an offline door-to-door marketing strategy to onboard the first 1,000 customers. And their growth was said to have relied on word-of-mouth referrals and organic customer acquisition. And tech was a big deal. Zerodha's CTO Kailash Nad is said to have a PhD in artificial intelligence. He has been credited for keeping the tech engine running. There was a development of the in-house trading platform called Kite. Kite's design was said to have allowed traders and investors to execute trades with ease. And Zerodha's focus on mobile trading apps made it more accessible to a wider audience. At the same time, India's growing mobile internet user base was growing. Kite was said to have a competitive edge that had speed and reliability. The platform was said to leverage technology to offer near real-time data and lightning-fast order execution. And this could provide traders with a significant advantage in volatile stock markets. But it was more than reducing costs. There was an aim to educate and empower customers. Many Indian investors may have lacked financial literacy, and so Zerodha was said to have launched initiatives like Varsity. Varsity is an online education platform offering courses on investing, trading, and markets. This free resource was said to allow people to ameliorate their financial knowledge and make informed investment decisions. But this may have also come about because Zerodha had a discount broking model without any research services offered. That's caused discount brokers may not offer all research services to clients. The growth is said to be fueled by word of mouth recommendations from satisfied customers. By 2017, Zerodha was said to have become the largest retail brokerage in India in terms of the number of active clients. One of its initiatives was Coin. Coin is a direct mutual fund platform that allows investors to buy and sell mutual funds with no commission. Coin not only aligned with Zerodha's philosophy of low cost investing, but also may have made mutual funds more accessible to the masses. And Zerodha introduced Streak. Streak is a platform for algorithmic trading. Algorithmic trading is using computers to automate the process of buying and selling financial assets. So, users could automate their trading strategies. And by reducing the cost of trading and offering transparent pricing, Zerodha was set to bring thousands of new investors into the market. This may have led to increased retail participation. The firm's emphasis on investor education may have helped raise financial literacy levels in India. In 2015, Zerodha was said to have made the delivery of equity investments free of charge. So, this may have attracted customers and made them interested in long-term investments. And in 2020, Zerodha was said to have achieved unicorn status without really relying on VC funding and being bootstrapped. Plus, the COVID-19 pandemic in 2020 may have led to a surge in interest in stock investing and trading. Zerodha may have capitalized on this increased interest, which may have resulted in substantial customer growth. But it's not always a smooth road. Traditional brokers may have been displeased with their market share erosion. There were said to be regulatory complaints and debates on fair business practices. These are said to be technical glitches, customer support issues, and more on the Zerodha platform. Zerodha may have also inspired other brokerages to revisit their pricing models and invest in tech. Competition may have led to a general reduction in brokerage fees across the industry. So, that's a benefit to capitalism right there. In FY 2023, Zerodha was set to have a revenue of about 6,900 crore rupees and a profit after tax of close to 3,000 crore rupees. And sure, there's growing competition, including players that are funded. But the Indian market may still be presenting growth opportunities. Only 3% of Indian households are set to invest in the stock market. So, there's an opportunity for Zerodha to expand its market boundaries to maintain its leadership position. One of the few profitable unicorns in India, Zerodha may have successfully challenged the status quo of India's stock brokerage industry. Here's to democratizing finance India-wide.